This channel is for educational purposes only. Please do your own due diligence before making any investment decisions. This is Joe Rabil with Invest Like a Pro. So today's video is going to be on multiple time frames and rules for multiple time frames. One specifically, which is straight out of my book. I have some rules that you want to follow. I'm going to give an example of that today. And today it's more about if you have, I'm looking at 3 time frames, a weekly, daily, and hourly. And if the weekly time frame is giving one signal in one direction and the daily is giving a trade in the opposite direction or a potential setup in the opposite direction, what do you do? How do you handle that? I'm going to give you a little bit more detail than I'm able to do in a book. Okay, I'm going to be able to go through and give you a little bit more of a guideline into how I would look at it, especially depending on what my preferred approach is. Some guys like to be a little bit longer term. Some guys want to be a little bit more of a trader. And so I want to give you those options depending on your style. So let's go ahead and go into this example. I'm using Microsoft for this. And so we've got something developing on the weekly chart to start. Now on the monthly, this is really, I've got this up, but really nothing's going on here. We're not using that for anything in this instance. I mean, I always refer to it and we want to know where it is in terms of resistance, where the 18-month line is and where the 40-month line is and where price resistance is, you know, what the direction of the momentum signs are. But what I'm looking at today, I'm focused more on the idea that we're breaking the downtrend line on the weekly. Okay, now we did that. We had our 1. Now we've had this pullback and we've created a 2. So the 1 is breaking the trend line, 2 is testing the low. Well, we've tested that low, and notice what's happening while we're testing. We're getting this little duckbill look to the. You see how this looks like a little duckbill? That's my preferred look to a pinch play, just so you guys know. I've never really talked about that before. But you notice how it does look like, I think that's the best way I can describe it. And so when we see that, I'm inclined to want to take a hard look at it for a trading move. Now, we know it's only a trading move, or at least the odds are it's only a trading move because this doesn't look very good. Okay, we don't have good momentum characteristics in the ADX right now. Green DI is very weak, but we can take trading plays inside of a range. A lot of times the first pinch play will show up inside of a range, and that's what's potentially happening here with Microsoft. So we've got something kind of interesting going on because we not only have a 1 and a 2 developed, we also have a pinch play. Now, I would probably only play this for a move up towards the 0 line or back up towards resistance, say up at 295 or 300 or something like that. And I'm also not going to do anything until something better takes place on the daily chart. But I've got the weekly here, and now if I look at the daily, look at what's going on the daily chart. We've got this strong move to the downside shown by pretty good selling pressure and serious overrun on the MACD. Not only that, as we rally up, we've got a higher low, higher low, higher low, and now another higher low, and we're getting really close to a declining 18. So what should everyone be thinking? Oh, well, this looks like a pinch play to the downside. So we've got a pinch play to the upside here and a pinch play to the downside here. So what's the answer to this? All right, well, if I'm inclined to be more of a longer term player, and I usually take trades off the monthly and the weekly or the weekly and the daily, then there's nothing to do here unless this fails. Let's say this pushes up through the moving average and then forms a higher bottom and we get a 1 and a 2 to develop on this time frame. We've got a 1 and a 2 here. Maybe we form a 1 and a 2 here, and now we know we've got some potential maybe to work our way up towards 295 and 300. And if I want to take that trade, I'm probably going to use the hourly to control risk and get the risk reward to make sense so I can put this trade on and make a move up to here. Now, if in fact I am more inclined to be a little bit more trading oriented, okay, and that's my style. It fits my personality, and I do better in those type of trades than I do holding longer term or looking for trend trades. Then what I'm going to be doing is watching this like a hawk, and I'm watching what's going on here. You notice how the green DI is starting to cause the ADX to climb a little bit. Notice how we've overrun the 0 line on the hourly. So I know that it's not as simple as breaking the trend line and breaking the 18 and the 40 and getting short. This is not a trigger. So So this really helps with the trigger for the pivot. I mean, for the pinch play. This is not a simple, if it takes out the prior bar's low, I'm getting short. I would not do that, especially because I know I'm fighting the higher time frame. Okay, the only way I can take this trade is if I'm getting a full-fledged signal on this time frame. And what's going to cause that is going to be a move that's going to cause this to break the trend line, rally up, and form some kind of a 1, 2, 3 to the downside. And now when that happens, I have to evaluate whether I have enough room down to support, because we have to assume there's pretty good support. We got a 1 and a 2 on the weekly. You know, the MACD is in decent shape. I mean, it doesn't mean that it can't be broken and this can't roll over and this can't fall through. I'm talking about probabilities. You always play probabilities, and we want to play A to A plus trades, okay? And an A plus trade here is or at least an A trade in this instance, would be, can I play to this low? Because I know that's what the higher time frame is telling me where support is, somewhere down in here. Can I do that off this time frame and this time frame and have it make sense? It needs to be 2 to 1. That means I make 2 times what I risk if I put a trade on. So if I put this trade on and I look at the entry that it'll provide, what my entry is going to be, what my risk is going to be. So if I get in here, I have to have at least 2 to 1 to make it worthwhile to me. If it's only 1.5 to 1, or if it's 1 to 1 to here, and like we're risking, let's say we're risking 5 points to the stop and 5 points to the target, it is not worth it to me. And it's also not worth it to me to do it at 1.5 to 1. Well, only thing that makes sense is 2 to 1 or better. All right, in this type of trade especially, I don't want to really do that. But really in all trades, I'm looking for at least 2 to 1 as a starting point. That doesn't mean you're going to get 2 to 1. Make sure you understand this. That's your starting point. That's your goal. But you could easily be stopped out or have something happen where you don't reach your goal and you don't necessarily lose the entire amount, because depending on how you set up your trade management, that happens to me all the time where I make a little bit of money because it doesn't follow through. Remember, swing trading is you're a crumb counter. You're just counting crumbs. You're not, it's the odds of you making a kill on a swing trade are really small. In fact, if you are, you're probably not trading very well. You're trying to you're just counting beans. You're trying to get little, add to your equity line slowly. You take small risk. So your equity line should look like this with small dips in it, because you're taking really small risk, a lot of break evens. And then, you just add the crumbs over time, and it adds to your bottom line. What I found is doing these type of swing trades can add to your bigger trades. If you take good risk, if you're really good with your risk management and your trade management, you can do this crumb counting, or bean counting, or crumb adding, where you're just taking the crumbs and adding it to the total. And if you do that, I think you're going to have a lot more success as a swing trader. Now, that's a totally different strategy than once you start using the weekly and the daily, or the monthly and the weekly. Now you're going for big wins. You're using really good trade management, and you're trying to hold. But you're taking targets, and you do what I call a scale and trail method. Okay, that's scale and trail. That means we want to scale out of the position slowly and scale and trail the position as it moves higher, and then see how far you can take it. See if you can't turn it into a monster win by taking, say, in those cases, I'd love to get a 5 to 1 mixed in, a 7 to 1 mixed in, and it can happen if you're using really good management skills. You can get a 3 to 1, 5 to 1, 7 to 1 win. You can get 3 to 1s on a regular basis, but even 5 and 7 to 1 will come periodically if you're doing it correctly. But you're also going to have, some losses, some 1 to 1s, some smaller wins are going to be mixed in. In any strategy, you're always going to have small wins and small losses if you're doing your trading appropriately. So what I'm telling you right now is that if you're a shorter term trader, you should be looking to see what is going on here. We've got a situation where a stock is rallying to a declining 18. We've got a pretty good look to the ADX. We've got a pretty good look to this time frame. The only thing is I'm not going to trigger off this time frame. All right, I'm not going to do a trade right in the face of the opposing time frame. This time frame, the higher time frame, is the dominant time frame. So I am always looking to do a trade. So the higher time frame, the rule is basically the higher time frame overrules the lower time frame. But what I'm trying to tell you in this video is that, and that's what I say in the book, that's one of the rules for multiple time frames, is that the higher time frame overrules the lower time frame. And generally speaking, I don't want to take this trade to the downside. But what I'll tell you is if I'm predisposed to taking swing trades, and Microsoft is one of my stocks, then I'm going to watch this and see if I can't make it make sense into this support. All right, that is how I would go about using multiple time frames for this. Now, if we get enough strength that this can't really trigger and this pushes through the 18 a little bit more, then we can look for the reversal here. This will turn up and form a pinch this way, and now we'll have the 2 time frame pinch play developing. And that's really what I would say is the setup for the long side here. So hopefully all this makes sense. Go ahead and post any questions or comments, and we'll see you next time.